DBS Group Holdings Limited, or DBS for short, is the last of the three Singapore-listed banks to release its financial results for the second quarter, as well as for the first half of the financial year 2024, ended 30th June around lunchtime today. It is also the first time since I started investing in 2019 that the bank have released its results at this timing. It normally releases its results in the morning before market hours. A quick recap. UOB was the first to release its results this time round on 1st August, followed by OCBC a day later on 2nd August. You can find my reviews on the two banks' financial results in the video description below. In this video presentation, you will find my review of DBS results in terms of its financial performance, key financial ratios, as well as its dividend payout to shareholders. Before I begin, a quick introduction about the bank. Besides being the largest bank in Singapore, DBS is also a leading financial services group in Asia with operations in 19 markets. The bank has received numerous accolades, including being named as the world's best bank by Global Finance and Euromoney, as well as the Global Bank of the Year by The Banker. This is on top of DBS being recognized as the safest bank in Asia by Global Finance for 15 consecutive years from 2009 to 2023. In the next two slides, you will find a review of DBS financial results recorded for the second quarter, as well as for the first half of the financial year 2024, starting off with its results reported for the second quarter. As you can see from the table, I'm sure you will agree with me, it is a stable set of results, with its net interest income, other non-interest income, as well as its net profit attributable to shareholders, all recording a mid-single-digit percentage improvement. Net interest income saw a 5% improvement as a result of a 5% increase in its commercial book net interest income, as net interest margin rose by 2 basis points to 2.83%. Additionally, loans and deposits grew by 3% and 6% in constant currency terms respectively, boosted by the consolidation of Citibank Taiwan. Net fee and commission income jumped by 27% to about 1.05 billion Singapore dollars, a new record for the bank. This was driven by a 37% climb in wealth management fees from a shift from deposits into investments and bancassurance, as well as an expansion in assets under management. Card fees also saw a 32% growth from higher spending. Other non-interest income was up by 6.5% due to improvements in the bank's commercial book other non-interest income from strong treasury customer sales, as well as an improvement in its market trading income. Finally, net profit attributable to shareholders was up by about 6% to 2.8 billion Singapore dollars. Next, let us have a look at DBS financial results for the first half of the financial year 2024. Overall, it is a good set of results reported by Singapore's largest bank, with its net fee and commission income, other non-interest income, total income, and net profit attributable to shareholders recording a double-digit percentage improvement compared to the same time period last year. Net interest income grew by close to 6% as a result of a 6% improvement in its commercial book net interest income due to a 5 basis point increase in the bank's commercial book net interest margin to 2.8%, along with a 1% growth in loans and a 2% increase in deposits in constant currency terms. Net fee and commission income jumped by close to 25% to a new high of 2.09 billion Singapore dollars due to a double-digit percentage growth in wealth management fees, card fees, and loan-related fees. Other non-interest income went up by more than 15% as treasury customer sales reached a new high. Finally, the net profit attributable to shareholders here is inclusive of costs related to the integration of Citibank's operation. Stripping that out, DBS net profit attributable to shareholders would have been at 5.76 billion Singapore dollars, a record for the bank. Next, let us have a look at some of the key financial ratios recorded by DBS for the second quarter of the financial year 2024, compared against the first quarter of the same financial year to find out if they have continued to remain resilient or have shown signs of weakness. I will be looking at three ratios here. Its net interest margin, return on equity, as well as its non-performing loans ratio. For those of you who are new to them, a quick explanation here. Net interest margin is a measure of how much a bank makes from its loans and the interest it pays to people who deposit money with the bank and other borrowings it has. Return on equity is a measure of how well a bank is using its investors' money to generate profits. Finally, non-performing loans ratio is a measure of the amount of bad loans the bank has compared to all the loans it has given out. Now that you have a better understanding of what these three ratios are, let us have a look at them in this table. Apart from its return on equity, which fell by 1.2 percentage points from a record high of 19.4% in the previous quarter to 18.2% this quarter, the other two key financial ratios remain unchanged. DBS is the only one among the three Singapore-listed banks to pay out a dividend to its shareholders once every quarter. Similar to the first quarter, the bank has declared a dividend payout of 54 cents per share to its shareholders, bringing the total dividend payout for the first half of the financial year 2024 to $1.08, compared to the payout of 90 cents in the same time period last year. This is a 20% improvement. If you are a shareholder of DBS, do take note that the dividend payout will go ex-dividend on 15 August, with the payout date on 26 August. To recap, financial results for the Singapore's largest bank for the second quarter of the financial year 2024 was a stable one, with a single-digit improvement recorded in its net interest income, other non-interest income, total income, as well as in its net profit attributable to shareholders. Additionally, its net fee and commission income at 1.05 billion Singapore dollars was a new high for the bank. In terms of its results for the first half of the financial year 2024, it was a much stronger one. Particularly, apart from its net interest income, the other financial results recorded double-digit percentage improvements. On top of that, DBS also recorded new highs in its net fee and commission income, treasury customer sales, and net profit. The three key financial ratios that I look at every quarter, namely its net interest margin, return on equity, and non-performing loans ratio, are also pretty much unchanged compared to the previous quarter, with its net interest margin at 2.14% and non-performing loans ratio at 1.1%. However, return on equity dipped by 1.2 percentage points from a record high of 19.4% last quarter to 18.2% this quarter. Personally, I still find the bank's return on equity a relatively high one. Finally, DBS dividend payout this quarter was also the same as the previous quarter at 54 cents per share. With that, I have come to the end of my review of DBS latest financial results reported for the second quarter, as well as for the first half of the financial year ended 30th June. If you find the review useful, I would greatly appreciate it if you can give this video a like and consider subscribing to this channel so you will not miss out on any of the videos I will be publishing ahead. Thank you for watching, and I look forward to talking to you again in the next video.